Good morning, Mark Soderberg with ADM Investor Services with your morning outlook. For Tuesday, July 1st, prices are mixed across the ag space overnight. Row crops are being pressured to begin the new month here. Corn right now is down 5 to 6 cents. Soybeans are down 7 to 9. Favorable weather here in the U.S. and better than expected crop conditions are pressuring prices here. Wheat is mixed. Chicago is up 5 to 6 cents. We are down a few cents in Minneapolis, up a few cents in Kansas City. In the products, meal is down $2 per ton, seventh consecutive session of contract lows for the August futures, while bean oil is up about 20 to 25 points. The Senate version of the big, beautiful bill looks to ban feedstocks produced outside of North America used to produce biofuels. That's providing a little bit of a boost here to the bean oil. Yesterday's EIA data showed biodiesel and renewable diesel production in April fell 4% to 354 million gallons, down 16% year over year. Bean oil usage, however, that was down only 1% to 829 million pounds for the month. Bean oil accounted for 31.6% of the feedstocks used in the production of biofuels, and that's the highest in 4 months. There were no major surprises in yesterday's USDA stocks and acreage reports. Soybean and wheat stocks, they were above the average trade guess, however, well within the range of estimates. Acreage-wise, everything came in pretty close within the range of expectations. In wheat, however, despite the USDA raising acres by 10,000, they did cut harvested acres by nearly 890,000 as USDA assumed a much higher level of abandonment in the southern plains, notably in Texas and in Kansas, which is providing some underlying support to wheat futures. Yesterday's crop progress and condition report did hold a few surprises. Corn conditions improved more than expected at 3% to 73% good to excellent, highest rated crop now since 2018. Bean conditions were steady at 66% good to excellent. In wheat, both spring wheat and winter wheat crops saw a 1% decline in good to excellent to 53% and 48% respectively. There were expectations for no changes here. Wheat harvest expanded more than expected, and that came out at 37%, still well below the 52% pace from a year ago and the 5-year average of 42%. We'll get census soybean crush and corn processed for ethanol after today's close. Bean crush in May is expected to have reached a new record at nearly 205 million bushels. U.S. weather just continues to be non-threatening here as we look out into the middle part of July as corn moves through its pollination stage. The next big USDA report is next Friday the 11th, as the USDA will incorporate yesterday's acreage data into their production estimates. New contract low for D's corn overnight. SEP 25 still holding above its contract low and above that psychological $4 price level. As harvest in Brazil is starting to accelerate, many production forecasts are starting to move into record territory. The market's role now is to find a price level to stimulate enough demand to absorb what also appears to be record yields here in the U.S. I'm not sure if $4 will hold here in the month of July. New 2.5 month low for August bean futures. North beans holding in just above last week's low. Support there is at 10.13 1/4. Spot oil continues to consolidate just above the 52-cent level. Markets will continue to monitor trade negotiations with China and others while monitoring the legislative course of the big, beautiful bill. U.S. dollar has also fallen to a fresh 3.5-year low. Thanks for listening, everyone, and I hope you have a wonderful day.